Hey traders, welcome to Charts and Coffee. Happy Friday, everybody. Hope everyone is having a at least for now, peaceful Friday, because OpX is upon us, and that means we've got a lot of shenanigans in store for today. Now, what do I mean? Well, as we take a look at what's happening in the broader averages, one of the main things we want to remember is while there might be some consistency in a trend, while there might seem to be some kind of technical setup, if there's going to be a day where you step back and kind of scratch your head and say, what the heck just happened? A lot of times it's going to be the way in which the options open interest in a lot of those high concentration weighted stocks are behaving because of higher levels of OI at certain strikes. Now, there's a lot of cutesy names we can give it, right? There's a lot of trading lingo wrapped around that, whether we consider it max pain or pinning or whatever. The bottom line is all of it has to do with where does most of the size sit and which direction would the market have to move to render the largest amount of options. It's never going to be all of them, right? But which way would the market have to move to render the largest number of options worthless? And that is just one phenomena that might be going on. Is that the only thing? No, but it's a pretty impactful one. So that's a lot of what happens today. And ultimately, what we want to also remember is that just because something happened wonky today, whether it was in our favor or not, I'm going to presume that I'm always going to see sort of the normalcy of the overall trend and sentiment resume on Monday. Friday is a bit of a bubble. It's its own little world. All right. So with that being said, let's jump into some questions. Paul, I really enjoyed learning about grab candles and Darvis on TradingView. I'm very impressed with your style. I've studied many greats. Hey, I appreciate it, Paul. I think, hey, I have too. And Paul, what you say reminds me of something I know to be so true, which is we stand atop the shoulder of giants, the people who came before us, whether they inspired us or whether we're actually just using their process. I appreciate that. But you're one of the few who talk about the previous session close. You know what, Paul, it's really interesting. I think that most people, if you go back and you study the greats, I think most people, if you go back 25, 30 years, there was a level of understanding, basic understanding in trading because it was so hard to get into trading, right? If you decided to be a trader like I did in the 80s or even in the 90s, it was hard. It was difficult. It was expensive. It wasn't the way it is now. There weren't sites and books. There was very little to help you get started. So the barrier to entry was high. The difficulty was high. And so by the time you actually got to the job of trading, most of the traders that I found that started in the 80s, started in the 90s, really had to work very hard at things that weren't sophisticated indicators, right? A lot of my early trading was very basic, moving averages, momentum type indicators, and support and resistance, things of that nature, because we didn't have the automation we have now. So some of the basic stuff, like a previous session close, understanding, price-based volume, those are the things that were pretty common. So yeah, it's old school thinking. You nailed it, Paul. You get me. Yeah. So that's really from when I came up as a trader. Anyone who's come up as a trader probably in the last 10 or 15 years, sadly was robbed of that because everything is, automations and algos and, platforms and no time spent charting by hand. And so, I sound like an salty old dog. Oh, back in the good old days. But there's some truth to that. The level of sophistication that a lot of traders have now is admirable, but the foundation of understanding a lot of times is lacking. Yeah, and it's an interesting contrast because, I was not nearly as sophisticated a trader as some traders I meet that are 3, 4, 5 years into it, and yet some really basics, they're utterly lacking. So again, there's a lot of contrast there. Whatever it is, when you decide to learn how to trade, to me, it's one of the most worthwhile things you can do, right? And I think that's why we're all here. All right. So let's see. Yeah, Daniel says reading the Wall Street Journal. Yeah, I mean, the internet was at its infancy. The first streaming charts that I got, I had to buy a separate dish for on my house. It was a company called DTN. There was no internet. And that little gem cost me something north of $1,200 a month to have this tiny little terminal and this dish parked on my house, and it would give me data, and the exchange fees. Oh my gosh. Yeah. So to be a trader now, the barrier to entry is amazingly low. And that's the way it should be, right? The markets should be accessible to everybody. And so, for those reasons, yeah, it's exciting to be a trader now. The degree of information you have, the access we have, it's the playing field is more level than it's ever been. I really do believe that. All right. Let's see. Along those lines, I studied a little bit about Nicholas Darvis yesterday. Yeah, here's a guy who was a dancer, paid in a Canadian rail stock, thought it was garbage, put it in a drawer, took it out, I guess, out of curiosity, and said, "Holy moly, this thing's worth more than it was." And that was it. I think all of us have that aha moment when we discover something about the market and it just sparks something within us. We just get very excited about the prospects of what we could do if we could understand what's going on all these lines and squiggles and candles and everything. My first charts were bar charts. They were bar charts. I used to get a big stack of charts from a company called Commodity Price Charts. They'd arrive in the mail every Monday, and I'd update this magazine of charts throughout the week, and I'd get that new magazine on Monday. Right? This is all pre-internet. Yeah. So Darvis, absolutely. While these are not Darvis boxes on my charts, they are very much an homage to Darvis because the basic thought process, the basic what if was very much, inspired by his work. Yeah, for sure. All right, look at that hood on the hourly. All right, so what do we have here, Kristen B? We have a lot of chop on the daily and not quite an uptrend on the hourly. What I would say is if you're looking at the hourly, well, let's go back to that Darvis I was speaking of. Yeah, take a look at the Darvis. But here's what I would tell you, Christine, pull it up on TradingView. Pull up hood on TradingView. Make sure you've got visible range volume profile running on that chart. Do the daily, do the hourly, and find out where the size is. Find out where the point of control for this year is, because this is a sub $20 stock. And if I've discovered anything about sub $20 stocks, it's this. And this could be sub 10, sub 5. It's a volume game. It's a size game. Price is almost a secondary consideration to where is the size. So I would keep an eye on where the size is and set a trade up in regards to that, looking at the underlying market structure, which I would say is largely up. It's bullish. So, what levels could you buy where you're in there with size, right? So that's the way I would look at anything under 20 bucks. All right. Next up, do I use the daily price movement ranges for swing trades? Oh gosh, yeah. We just finished. Thank you for the question, JR. Yeah, we just finished an entire class on that back in, March or April? And in terms of for a 2 to 3 day time horizon, I'd focus on the 1 hour and the daily price movement range. So absolutely. The DPMRs, I designed the DPMRs for swings. That's their job. So yes, but for something as short as 2 to 3 days that you're talking about, yeah, 1 hour. That would work the best. All right. And I think Bot just mentioned that too. Yeah. All right. Next up is Jana asks, can I explain the ES? Is it a futures chart or the same as the SPX? There's a lot of varieties of looking at the S&P, and the ES is a futures chart. Now, this particular futures contract trades 5 days a week. It opens on Sunday. Trades 5 days a week. So Sunday evening, 6 p.m. Eastern, it opens up. Guess what's not open then? SPY, SPX, the stock market, right? So the main difference for me is that the ES is a reflection of the S&P with a lot of hours behind it. Meaning, if there's 24 hours in a day, S&P is trading for 23 of them. And unlike things that are mostly active between 9:30 and 4, if I'm going to trade anything related to the S&P, SPY, SPX, the ES itself is the best place to look. And that's the way I look at that. Is it the same thing? You're looking at the S&P 500, which is a high concentration weighted group of 500 stocks, weighted with mostly tech, financials, and healthcare. Now, whatever variety we want to look at, SPX, XSP, SPY, options on all of them, that's really still the same thing. 500 stocks, high concentration weighted mostly in tech, financials, and healthcare. All right. Next up is Investors Business Daily. Yep, remember? Yeah, there were so many publications, but very few of them were for short-term traders. And to me, if you're holding something for less than 6 months, if you're holding something for less than a couple of weeks, right? But there's a lot of longer-term approach too, which I'm a fan of as well, but very little. Yeah, Jesse Livermore. Yeah, there's a lot of folks out there. Even, you've got, look, Charles Dow was writing a little newsletter in the late 1800s, which ultimately became the Wall Street Journal. So, all right. Is there a difference between SPX and ES? Look, I could get into the definition of what they are and so forth. The main difference for me, right, is this. And it's really the only difference that frankly matters, because everyone can go trade whatever it is they want to trade, right? They're all great trading symbols. SPY, SPX, XSP, I haven't ever traded. MES is the micro for the S&P futures. ES is the mini for the S&P futures. So the bottom line is, if I want a running start at 9:30, if I want to understand what indicators are already able to crank out volatility zones, volume levels, indicators that need open, high, low, close, I've already got a running start of many, many, many hours on the ES. If I'm going to apply a study to the SPY, there might be a thin pre-market, but really most of the size and interest comes in at 9:30. So you really don't have that running start. The reason I like the ES futures is because they are nearly 24-hour in nature. So if I understand what's going on in the ES, the SPY is going to do, give or take, the same thing in terms of direction, support, resistance, follow through. SPX is going to do the same thing too. MES is going to do the same thing too. XSP is going to do the same thing. So when we have a single market called the S&P and 4 or 5 ways to trade it, I'm going to ask myself which one's going to give me that more complete view. I'm not saying right or wrong, but more complete. And if you have something trading with liquidity, nearly 23 hours a day, when we stop trading in the US, there's a little bit of a lull. And the Asian market picks up the S&P futures, starts trading it. Then it rolls into the European markets, then the UK markets. Once again, a little bit of the lull, and then here comes the US markets. So that S&P is getting that global participation. So that's the reason I like to look at it. But then many of you know in the Sector Secrets Mastery, what I'll then do is take a look at the SPY. We traded the SPY on Wednesday as an ETF alternative, choose your own adventure, right, to the SPY. We took an ES idea. Some traders don't want to trade something as leveraged as the S&P. Look, futures are great, gang. Futures are great. And a lot of people walk into futures with big old stars in their eyes thinking, oh my gosh, leverage, here we go. We're going to grow a small account. Let me save you the grief. This is how it ends. You turn a decent amount of money into no money. That's what happens when you wander into a highly leveraged product without understanding that each move, each point in the S&P of one is $50, right? $50. But the problem is there's day trading margin. So all of a sudden, this very leveraged product of the S&P futures at $500 or sometimes, right around there, day trading margin, people go, well, I could trade that. Whether or not the margin is affordable is completely irrelevant in terms of risk, right? What the risk is $50 per point. What the risk is for the NASDAQ, regardless of a $500 margin, is $20 per point. Then you ask yourself, what is this market capable of moving? Now multiply that by $50, and now you've got your real risk. And most folks don't do that. They see a $500 day trading margin. They say, great, I'm going to take my small account into or medium-sized account into the futures market, and it ends in bloodshed, gang. That's it. That's how that ends. Unless someone gets lucky, and lucky is 2020, finding an overall uptrend. Lucky is finding an environment and time where everything's moving up so well. As one of my mentors said, don't confuse an uptrend with brains, kiddo. That still stung. But a lot of times you can get lucky, but we know those things won't last forever. So yeah, I think the main thing is, how can I trade the S&P and control risk, but respect that the S&P ES is the best way to understand what's happening in the S&P. My 2 cents. Man, it might have been 10 cents. But that's the way I look at that there. I'm a huge fan of futures. I've been trading futures since I was 15 and a half. But I will tell you, modern day movement and day trading, the speed, be aware, right? We have a saying, right? Anyone who's into horsepower, motorcycles, cars, speed kills, right? So be aware of that. Now, how can you get to futures? Micros. Use something smaller. It's like these motorcycle guys who need to go buy a 1200cc motorcycle. The 250s will get you exactly where you need to go, right? So find the micro, trade that, or trade the SPY as an alternative until you're ready for some of the more volatile, more expensive, frankly, that's risk, ES. And I would put SPX in that group too. If you look at the typical prices, unless you're going to go way out of the money and hopes for sort of a Hail Mary, which, you know, if the risk is there, that's fine. But if you're going to play actively at the money options or actively within certain types of contracts like the ES and SPX, they are spendy. They are spendy. So be careful with that. All right. Next up is Fernando. You know, it's interesting. I've been getting a lot of AMD questions the last couple of days, and I appreciate it. But I got to say, Fernando, please, if you've been watching Charts and Coffee for a while, you know what I'm going to say, right? Please crack open the SMH ETF and take a look at AMD. It is nowhere near. And I know it's having a couple of woo kind of days. Don't get caught up in that. The best follow through, if you're looking for a good day or two, sure, look at AMD, maybe shorten it to a 5-minute or a 1 hour, but I don't know your time horizon, right? So if you're looking at a longer term time horizon, Fernando, look at something else. Look at NVIDIA, look at Taiwan Semi, look at Texas Instrument, look at Qualcomm, you know, almost anything but Intel and AMD. However, I would say if I was going to be specific, okay, Rog, if not AMD, then what? If your time horizon is longer than maybe 1 to 3 days, then this applies. If your time horizon is right now, AMD is having a nice run, enjoy it, use it, I get it. But beyond that, follow through in NVIDIA, Taiwan Semi, AVGO, Texas Instrument, Qualcomm. I would say those would be my favorite, as well as SMH itself, the semiconductor ETF itself. So yes, this is basically, if the overall semis are a rising tide at some point, AMD, which is absolutely not participated. Take a look at that daily time frame. So yes, time horizon is a huge thing. And you might say, Rog, I'm only looking at the next 1 to 3 days. You know, let me know. But let's say that's the conversation. You know, as far as I'm looking for a short-term time horizon, you know, AMD obviously is very jumpy. It's moving. It's green. It's froggy. But if you look at the overall movement in the SMH, AMD is only now getting with the program in the way that I look at it. So short-term time frame on AMD would make a lot of sense, but longer-term follow-through, I'd probably look for dips on some of those other more established moves. And by the way, the only uptrend in SMH, the semiconductors, is Texas Instrument, which is kind of interesting. So if you're looking for a reversal, then I would say look at something called a 1, 2, 3. Okay. And that works like this. Your number 1 point is on the 2nd of May. Your number 2 point was on the 7th of May. Your number 3 point was on the 14th of May. And your breakout, this is a breakout strategy, was on the 15th as price traded higher through 157.70. So if you're looking for a reversal, it's got to be a move that ideally is now moving into a sideways market. And that's where the 1, 2, 3 would be. By the way, I have a total write up on that at countdowntrader.com. And 515, that was the breakout specifically through 157.70. And the reason that's valid is no longer do we have red candles and no longer do we have a downtrend. That's a pretty cool looking 1, 2, 3 reversal on the daily. So Fernando, take a look at that. And that triggered on, as you can see here, the 15th. So that's the way, if we were talking on the 15th, there's the beginning of the 1, 2, 3. It's a tough one. That's not something I usually go to primarily, but once you understand the pattern and the environment that it's valid in, I think you'll love it if you're looking for reversals like that. Okay, gang. Thanks as always. Thanks for the question, Fernando. As always, gang, be good to each other. I'll see you on Sunday for our Top Tier Outlook show at 6 p.m. Eastern. It's OpEx, gang. Heads up. It's a little world unto itself. I'll see you, the rest of everybody, on Monday. All right. Until then.